This is Matthew Cratter from Trader University, and today I want to answer the question, is Bitcoin too slow? And the related question, is Bitcoin just old technology that's going to be superseded by a more advanced cryptocurrency? This is a question I get a lot from engineers, both traditional engineers and software engineers. You can find the same thing if you just do a quick search on YouTube. You search for fastest crypto, and you end up with all these shiny new projects with thumbnails that are actually, I think, much better than mine. You can do the same on using Google. You can find out here that Bitcoin can do approximately 7 transactions per second on the base layer on the blockchain. Obviously, the Lightning Network has increased this a lot on a second layer solution, but we can just go through here and look. Ethereum on the base layer does 25 TPS. It probably does more than that by now. And we can go all the way down here. Bitcoin Satoshi's Vision, which is a failed project, a failed fork, can do 224 transactions per second. If we scroll all the way down, we end up with the winner of this contest, which is something I had never heard of before. It's called Aleph Zero, and they can do 40,000 transactions per second. But I think one problem, you always have to make sure that when you're asking a question, you're asking the correct question. If you were asking the question in the late 90s, which typewriter company is going to win the race, you were asking the wrong question because all typewriters were essentially going away. Likewise, for some other things like buggy whips, etc. If we look at so what I'm going to suggest in this lecture is that there's some related questions, some slightly different questions that are in fact the correct questions to ask, not to ask which cryptocurrency is the fastest. So let me share some of those considerations. Aleph Zero here, which can do 40,000 TPS, supposedly, if you Google it, has a market cap of approximately $33 million, which in finance terms, in the world of markets, is tiny. This is the size of a micro cap. No one can use a currency that's $33 million market cap. Likewise, we can take a look at Bitcoin SV. Here we see that the test network, at least the scaling test network, did 9,000 transactions per second. But then we come to the problem when Musk and Tesla decided to buy a cryptocurrency for their balance sheet. They chose BTC. They chose Bitcoin. They didn't choose BSV, even though it can do things faster. And obviously Musk has an engineering background and appreciates things like this. One major problem, though, is if the market cap, as we said with Aleph, this Aleph project, if the market cap is too small, you can't get the big players to come in. So you can think of the market cap as sort of the size of the pond that you swim in, and then the transaction size is the size of the fish. You can't have a whale in a home koi pond, and Tesla is certainly a whale. There was no way they could buy $1.5 billion worth of BSV, since the entire market cap of BSV was roughly, I think it was a little bit less than this at the time, but roughly 3 or 4 billion. And so BSV, even if you had an engineering mindset and you really appreciated the engineering behind this, I'm not sure the engineering is great, but if that was a metric you were looking at, it still didn't matter. The market cap was more important. And then you have this virtuous circle that starts, or virtuous cycle, the fact that Musk bought Bitcoin, BTC, rather than buying Ripple or Ethereum or BSV. This helps to increase the demand for Bitcoin, for BTC, from people who are copying Musk, from other corporations who also want to be able to swim in a big pool. Obviously, Bitcoin now has a market cap roughly of $1 trillion. So this allows much larger corporations to get in. They could never fit into BSV or Aleph. So that's one question. Can I actually move large amounts of money around? And if you're a billionaire or a corporation or a pension or endowment or hedge fund, it's not worth your time unless you can actually participate in the billions. This is one thing that's so exciting about Bitcoin hitting these new very high market caps is it allows a whole new class of large institutional investor to participate. So that's one question that one should ask: the size of the market cap, the size of the pond. This is much more important than the transaction speed. The next question is, what sort of final settlement assurance do I get? Is there counterparty risk? Is it a bearer asset? So a gold bar, for example, or a gold coin, if you have it in your hand, there's no counterparty risk, etc. If you have a US dollar in your hand, there is some counterparty risk. For example, the US government could magically disappear overnight in a thought experiment, and then that piece of paper is worth nothing. If you have a U.S. Treasury, that's an IOU from the U.S. government, the federal government as well. And so there are very few things that are bearer assets. If you have a car, that's a bearer asset if you've paid for it completely because you own it, you have it in your possession. But people don't trade using cars, especially central banks, especially large institutions. And so this is one of the very exciting things about Bitcoin is it is like gold. It's like digital gold. It's a bearer asset. And if you hold your own private keys, you own that Bitcoin. There's no counterparty risk. And there's also very good settlement assurance. After about an hour after you make a transaction in Bitcoin, you can consider it completely settled. This is the right number of transactions or the right amount of time that needs to pass such that if someone tried to reverse all the transactions through a 51% attack, it would be more expensive than the value that's being transacted. And so this is how we know that Bitcoin has very good final settlement assurances. The same way that if you have a block of gold in a safe at home, it is yours. There's no counterparty risk, and there's no risk that the transaction could get reversed, as it can with a credit card statement or a bank statement. Obviously, a bank account can be frozen by the authorities. Now, if you're going to store a lot of money in an asset, in a bearer asset, or in a cryptocurrency, you want to make sure that the network has really high security. Bitcoin, because it has proof of work, which is very expensive, it uses lots of electricity, lots of energy. This is actually a good thing. If you're running Fort Knox and a competitor comes and says, I offer much lower fees to store your gold and it's slightly less secure, people will always pay the higher fees for the higher security, especially if you're a really serious player, if you're a Tesla, if you're a billionaire, if you're another corporation, etc. And so one of the very attractive things about the Bitcoin network is it has the highest hash rate. And it's not branching into something silly like Ethereum is with proof of stake, which is much, much less secure than proof of work. People are always comparing Bitcoin to something like Visa. Visa is, it's really an unfair comparison because Visa is a network. It's a network like the Bitcoin network, but it's not a final settlement network. And what happens at the end of every day, or maybe this happens intraday, I'm not really sure, but the banks behind each of the accounts, so for example, the bank behind your account when you pay your Visa bill, and then another bank that Visa services, these various banks, the bank of the merchant, the bank of the customer, etc., will shuffle things around at the end of the day, and they will move money through the U.S. financial system to settle everything. So Visa transactions are obviously not final settlement. You can get one reversed any time from, I want to say, 30 to 60, 90 days after a transaction. In addition, Visa is highly centralized. You could be kicked off the network. If you sell certain products, Visa doesn't want you on their network as a merchant. And Visa itself, in addition to being centralized, is based on payment rails that are the U.S. financial system, the U.S. banking system. The U.S. dollar is a highly centralized currency. It's created by the Federal Reserve, and the U.S. Treasury oversees it. It's highly centralized. It's highly manipulated, and it's being printed into oblivion. Something like, I forget the exact number, but 25-30% of all the U.S. dollars that have ever been made were made in the last 12 months. So Visa is not the Visa network. Excuse me. The Visa network is not a good comparison for the Bitcoin network because the Visa network itself depends on this huge banking system, and that banking system is itself protected by the U.S. military, which punishes people like Saddam Hussein, who try to sell their oil using euros instead of using U.S. dollars. We have these giant aircraft carriers that keep all the trade channels open, and the U.S. enters into these terrible wars every few years. I believe the Iraq War in the early 2000s cost something like $5 trillion, and not to mention all the young men and women's lives that were lost. And so this is the real comparison when people say that Bitcoin is bad for the environment and or it uses too much energy. How about the U.S. military, which is the biggest consumer of crude oil in the world? Is the U.S. military good for the environment? All these bombs we drop on women and children in various countries. So this is one of the comparisons. If you are moving billions of dollars, you can't use Aleph, you can't use BSV. You have to use US dollars, you have to use Bitcoin, possibly Ethereum as well. If you're finding this video helpful, I'd encourage you to hit that subscribe and like button. So let's compare Bitcoin to really the closest analog asset, which would be gold. Gold, as we said, is a bearer asset. It has good final settlement assurances. When you have gold in your pocket, it's really yours. No one can take it away except through force, but there's no counterparty risk. After a lot of Germany's gold was moved, I believe this happened during the Cold War, was moved out of Europe. It was moved to Paris and to New York. Some of this may have happened during World War II as well, or post World War I. I can't remember the details, but either way, there was all this gold that was outside of Germany. Germany decided to repatriate it, 20, 30 years after the Cold War was over, and they were no longer worried about Russia coming in and possibly stealing the gold. It took, I believe they started this in like 2012 or 2013, took 5 years and cost something like $10 million to move this gold from the vaults in Paris and at the Federal Reserve in New York to back to Germany. We can compare that with Bitcoin. We had a transaction just a couple days ago on February 16th where someone moved $5.4 billion and it only cost $18 to do it. This transaction could be considered to have final secure settlement after 60 minutes. So compare 5 years and $10 million to move $31 billion to 1 hour and an $18 transaction fee to move $5.4 billion. This is why gold has no future except as a pretty piece of jewelry or for use in some sort of artistic usages, because Bitcoin does what gold set out to do, which is to provide a store of value and to provide a good final settlement assurances with no counterparty risk. Bitcoin just does it much better than gold. Here's the actual transaction, the $5 billion transaction. I thought this was an interesting animation of another way to think about this. You can't just think about the number of transactions per second, but you need to think about the actual value that's transacted. So VTPS rather than TPS. This is a slightly old animation. I was unable to find updated data and put it together. So these numbers are much higher across the board. I would say especially for BTC and ETH, which have both really appreciated a lot. But we can see that Bitcoin, in terms of the transaction, you can only have, call it 7 transactions per second on the chain. But each of those transactions could be $1 billion. So what you really need to do when you're making this comparison is look at the value transacted per second rather than just the number of transactions per second. Aleph, or whatever this is called, Aleph 0 is really fast, but no one uses it, so it actually doesn't matter at all. We can see here that at least back in December of 2020, Bitcoin moved nearly $500,000 in value permissionlessly every second. And here's XRP over here at $2,000 per second. If we look at a chart of BTC, this is BTC which is the real Bitcoin since the end of 2018 to the present. We can see how much it's appreciated. Compare that to BSV. The market understands that this is a failed project, and it doesn't matter what the engineering specs are for it. It just cannot compete in terms of final settlement, in terms of the security of the network, and in terms of market cap that allows really big fish to swim in the pond. If you want to send money very quickly, this is what I've always argued, and this is what will continue to happen, is most people will use the fiat money rails to send money. Venmo is fairly fast, and obviously the traditional SWIFT system and the wire system is a little bit slow, but it's fairly easy now to beam money back and forth between businesses or between individuals using Venmo or PayPal or Cash App or Zelle or any of these services. I think that when the Fed and other central banks come out with their central bank digital currencies, really smart, what you call smart money, it will be extremely fast as well, and it will interface nicely with all these services, and you'll be able to transact really quickly, certainly much more quickly than you can in Bitcoin, using these rails. But the problem is these central bank digital currencies, they're not going to be scarce. They're going to be printed up in the same way that the current digital currency is printed up. They're just too many dollars, and they're being printed every day to monetize U.S. deficit spending. The other problem is we just don't know the future monetary policy of Ethereum, for example. It can always be changed. It has been changed over time. And we sort of do know the future monetary policy of the U.S., that this money printing is going to need to go on forever simply because of all the entitlement spending that needs to be made, and there's not enough tax receipts to cover that. So there's no these payment rails, these money rails are going to be very fast, but they're not going to be a place you're going to want to store the fruits of your labor. They'll be devalued every year massively, as the U.S. dollar is being devalued now massively every year by 15 to 20%. And so what people will do is maybe they'll store their value in Bitcoin, and then they'll just convert a little bit into fiat as they need to spend it, or they'll just borrow against their Bitcoin, and that way never need to sell their Bitcoin. As I understand it, this is already happening in countries with weak depreciating currencies, as in Brazil and Argentina and Venezuela. People try to store their wealth in either hard assets. If they get a paycheck, they'll go out and buy a bicycle or something immediately, rather than trying to hold on to the money, which is constantly losing value. Or they will hold U.S. dollars, for example, which is of all the sinking ships that are fiat currencies, it's the ship that's maybe sinking the least quickly. So they'll hold citizens of Brazil or Argentina or Venezuela or Zimbabwe. Maybe they'll hold U.S. dollars, try to store their wealth in U.S. dollars in the black market, and then just convert a little bit to fiat every time the local currency, whether it's the peso or whatever, or the real. They would convert that to do their daily spending. So I could see something very similar happening in the U.S., where you store your wealth in Bitcoin, and then you use the CBDC fiat payment rails for very fast transactions. The CBDCs, they're not going to be built on Ripple. This is not going to be XRP based or anything like that. That's just a joke. But there will be some technology here, and it will provide very fast TPS and also VTPS, value per transaction. But again, the future monetary policy of this will be very bad. It'll be printed into too much abundance, and it will cause the value of each dollar to be worth less, as happens and has been happening every year. Bitcoin is a very simple piece of software, relatively speaking, and as a result, it has many fewer attack surfaces than other cryptocurrencies. In addition to having the largest market cap, it just does something very well, which is it settles value in a really secure way. And in this way, this could be the sort of fundamental infrastructure or substructure, I should say, of the new global financial system, where this is where the value is really being stored. And this is where nation states, federal central banks, billionaires, corporations choose to store their value. And that's a really huge market. That is the hundreds of trillions of dollar market, this store of value market or category. So Bitcoin does just this one thing. It does it really well. It allows you to move $5 billion for just $18. And in this the Bitcoin blockchain, space on the blockchain is in very high demand, and it is relatively expensive, though it's certainly cheap compared to moving gold around. But as a result, the Bitcoin settlement layer, the base layer, the blockchain layer, will be used to settle these really large transactions, and then there'll be this other infrastructure perhaps built on top of it. The problem with a lot of DeFi is that it's very complicated. There are a lot more attack surfaces, and we just saw a couple weeks ago that a Yearn DAI vault was hacked, and $11 million were drained out of it. DeFi is a really interesting area. This is fun stuff, but this is not where institutions or central banks are going to put their money. Bitcoin is old tech. It's fairly slow tech, but it does what it was designed to do. It allows you to store value in a scarce asset, and it allows you to send that value to anyone you want without having to get anyone's permission, and it allows settlement of that value within a very short period of time. Call it 30 minutes to 60 minutes. Bitcoin is not perfect, but it is good enough in the same way that, let's say, like some of the early Microsoft operating systems were good enough. Those were actually quite buggy and not that great. So in this way, Bitcoin is actually a much cleaner, more elegant piece of software, and it does this one thing really well. And this is one reason it's reached approximately $1 trillion market cap. And so the next time one of your engineering friends says that Bitcoin is too slow, I hope you'll refer them to this video so they can get the bigger context, the context of network effects, the context of market capitalization, the context of high hash rates and security and final settlement assurances on a base layer. I think these are the correct questions to be asking, not asking, am I building this really fast software in my garage that can do 1 billion TPS, but no one is using it, and it's not that secure, and it doesn't have the huge mining hash rates backing it up and securing the network. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.